shifting from Washington to Wall Street. Food and beverage giant Kraft Heinz sinking a whopping 27% today and hitting an all-time low after the slew of bad news for the company. Kraft reporting disappointing earnings after the bell last night, with misses on both the top and bottom lines, slashing its dividend by 36%, writing down the value of its Kraft and Oscar Meyer brands by $15 billion, and lastly announcing that the Securities and Exchange Commission, the SEC, is investigating the company for its accounting practices. Ooh. Today's plunge means Kraft Heinz has lost a whopping $16 billion in market value, and that's got a sting for a lot of investors. But what a hit to none other than the Oracle of Omaha himself, Warren Buffett. Buffett's Berkshire Hathaway's Kraft Heinz investment tumbled about $4 billion in value just today and $10 billion since his original investment. But let's note that it's not just Kraft Heinz. A lot of these consumer staples companies have been under a lot of pressure. Another Buffett holding, Coca-Cola, is also struggling. We saw that last week, right?
Well, so, and the story here is, it's not just Kraft Heinz, it's not just Coca-Cola. As you say, the larger story is big blue chip American consumer brands that for years and years and years could do no wrong. There's a way to describe them as the Campbell's soups, the generics. Or, my friend Craig Giammona, who's a food reporter at Bloomberg, he wrote a story on this morning, and he described it as the stuff that's in the middle of the grocery store.
Center of the grocery store is really struggling.
Yeah.
They've got challenges from outside brands. Amazon has been coming in and really undercutting their business, and they've tried to say that it's consumer taste that has changed. Well, no, not really.
But also kind of really organic, gluten-free, vegan.
True. Not a lot of people want
Exactly.
bologna anymore, but the thing is people still are buying those staple products. They just don't necessarily want to buy it from Kraft Heinz anymore.
When's the last time you guys had an Easy Mac?
Okay, first of all, Heidi, we've discussed this before. I have never
I'm the only person
Easy Mac.
Easy Mac.
There's nothing wrong with Easy Mac.
I know, it's great.
Now, I will give you that usually now I go for Annie's mac and cheese. So another example now, I'm sure Annie's, they all sell out.
Yeah.
That, of course, is my other favorite spiel whenever we talk about these companies is all of the young, artisanal, hipster, millennial food brands. Sir Kensington's, Cliff Bar. Actually, Cliff Bar, I think, is one of the few that hasn't sold. But even Blue Bottle Coffee.
Yeah.
They all market themselves in the first few years as, we're not big food. We're small and nimble, and we're healthy, and we're eco-friendly. And then they say, we're selling to Procter & Gamble, or we're selling to Nestle, or we're selling to General Mills. They all just sell out to big food in the end.
Well, there's been a huge backlash when it comes to food, right? To Heidi's point, a lot of people want to go organic now. They want to feel like they're eating real food, not necessarily cardboard in a box. So,
but you know what bothers me a little bit is that a lot of people look to Warren Buffett as, a value player. He lets investments sit for a long period of time, big dividends. People can just invest and let it sit. But in the case with Coca-Cola, just back in May, he was talking about both companies, Kraft Heinz and Coca-Cola, saying, hey, consumer taste has changed. These companies aren't the same as they were 10 years ago, even 20 years ago. And so that raised a lot of flags at the time, and this is just proof of that. Coca-Cola as well. Inflation, commodities prices increasing. It's all hitting the staples.
And there's a question whether Buffett's going to buy the dip. Some people have put that out on Twitter, whether that's going to happen.
Well, so worth mentioning, this is just one of two hyper-recent bad news moments for big Berkshire investments. The other being Apple.
Right.
Big stake in Apple, and then Apple says we're going to miss guidance. iPhone sales down, China bad. And the larger story, I found an old story of mine. It's been exactly 4 years since Buffett, that is Berkshire, and 3G Capital, the Brazilian investment firm known for cutthroat accounting, austerity every year. It's called zero-based budgeting. So instead of, let's review the budget for this year, well, last year's budget worked, it's, okay, how can we make it even smaller every single year, trying to get to zero? Cut costs, cut costs, cut costs. 4 years since they came in, bought Kraft Heinz, it hasn't worked out. Now, other examples where the two teamed up, at first, were working out quite nicely. There was Burger King, and then famously AB InBev, Anheuser-Busch. That was another 3G Capital play where it did work. They cut costs like crazy, and for a while, things were good. Of course, now, another business struggling, the beer business, in America.
Right.
But this has not worked out so well 4 years down the road, And Jared Blickery, our colleague, was telling me that maybe if Kraft Heinz had pulled off the acquisition of Unilever that it wanted, then things would have been okay. They would have been able to at least stall for longer and not take this write-down because they could have gotten extra infusion from that. But it didn't happen.
Since that, the stock has just been on such a precipitous decline since the 2017 peak.
Even before
in April.
today, right.
Exactly. So it's been coming, but this just came as such a shock because it was such bad news. The SEC subpoenaing the company.
The trifecta.
Is anything okay?
Like what?
Right, exactly.
And well, trifecta, right, that's what I kept thinking this morning. Wow, three things. But actually, in your read there was a fourth thing, which was, there was already a slide happening. So there's the SEC, there's the write-down, there's the miss. Right. And then there was one other thing you said the intro was happening.
And we also have to note that Barclays cut Berkshire's earnings estimate by more than half. on just this loss, this Kraft Heinz loss.
Yeah.
That's crazy.
I wonder what their next big move is going to be.
Something.
There has to be something.
And by the way,
I want to hear from.
when it comes to ketchup, it has to be Heinz.
I still get Heinz.
Has to be. In fact, I was at a restaurant recently. They had Hunts. It's
What's
like
that?
no. A different ketchup.
You don't even know.
Some people like,
Right.
but is not the same.
Kraft has a lot of brands that they're just going to have to jettison off. That it's just not making them any money, and no one wants to buy them.
So in
our
other words, you
childhood-
don't wish you were an Oscar Meyer.
But our
Wiener.
childhood.
No,
was
for hot
Oscar
dogs,
Meyer.
it is Oscar Meyer for
Capri
me.
Sun.
But
Did you guys drink Capri Sun growing up?
no.
Oh my gosh, was it
Sugar.
just me?
Garbage.
No.
Could
But
be
Heidi
really
has
interesting.
terrible taste in food.
Hey,
I just
hey,
say that.
I report on all the fast food stocks. I love fast food. It's no secret.
And
One
she
thing
eats it
I
all.
always say, by the way, an important caveat here. I mean, I know most people know this, but Kraft Heinz isn't going anywhere.
No,
okay,
it's
they're
not.
struggling.
Of course
They've got to
it's
make
not.
changes. They've got to cut costs. They've got to find a new play to make, but they're not going to go anywhere.
These things
I mean,
are called
this is a
staples.
big, big, big
They're called
company.
staples for a reason. They're not going anywhere. People will continue to buy ketchup. They will continue to buy cold cuts. These things are not going to go away.
And
Kraft
hot
is just
dogs.
going to have to make it
They
profitable.
just need pricing power. Just need to throw that in there.
Sure.